Good afternoon, everybody. New video today with my beautiful beverage. The stock we'll be reviewing is PayPal. Let's get into it. All right, so PayPal. Let's get right into it. Um, First up, weighted average. Looks like we got a 9.1. That is pretty solid. Target price 89. Good long-term growth rate. 13.1% is very nice. Right into the income statement. I am going to try to do the face cam more. I used to actually position it better, but at this point, I do not care. Sales, very good growth, very solid growth. Operating income, it looked like they did take a bit of a dip 21 to 22, but other than that, solid, consistent growth, looking like again another all-time high this year. Got that in net income, solid growth. Again, a dip 21 to 22. I would be interested to know what happened there. It looks like some kind of very large other operating expense kind of affected that. But full points for the net income. EPS is growing, looks solid. Total shares, very good. Basically decreased every single year, literally every single year. So that's good. Going right into the balance sheet. Let's see the cash situation. Cash is very solid. You'll notice in a second when I go over the debt situation. Assets look good. Short-term debt, very little, especially compared to their cash. Both debts, long-term, short-term, are very easily coverable by their cash. If they need to, short-term debt is good. Short-term, long-term, good. It's not decreasing. Actually, they have decreased it over the past year. Short-term did increase though, but again, when it's coverable by cash, it does not matter. You know what? I will put it at a 0.5 just to be fair because it is increasing, but it is coverable by their cash. So it's really whatever. In terms of retained earnings, I kind of doubt this will be positive, but let's see. Wow, highly positive, very highly positive. Okay, that was a little unexpected, but really, really solid retained earnings. I mean, that's billions of dollars every single year that they're retaining for the company, which is fantastic. So let's go right to the cash flow sheet, see what that's looking like. Okay, what we want to see is the operating positive and growing. Now it declined 21, 22. Let's go into the quarters for this. Usually that makes it look a little bit better. So 2024 looks solid so far. I mean, I don't really want to say it's increasing though, unfortunately. Now it is positive, which is good. That's very good. So I think I'm going to give it a half here. But again, it's not really growing, which isn't the end of the world, but still something. So investing cash flow negative, yes it is, other than last year, but again, that's much smaller than the other years. That's no big deal. Financing cash flow negative, yes it is, great. You can see changing capital stock, that is always fairly good to see. Repurchase of common and preferred, fantastic. We love to see stock repurchases. Free cash flow is growing. I mean, again, 21 through 23 was decreasing though, but apparently, let's go back into the quarters now. Apparently, it's going to be all-time high this year. Let's see. I mean, again, it seems like December is seasonally high for them. I mean, well, actually, no, not there. Um, I really don't know what to think. I might give them a 0.5 because it's positive, but it's really not growing but apparently the estimate for this year is a massive all-time high. So I don't know what to think there. I'm going to give it a 0.5 only because there's a little bit of uncertainty there, and it was decreasing for 2 years, which isn't terrible. That's not the end of the world by any means, but it's also not the best amount of confidence. But there is still a lot of good things there. I'm trying to keep it simple by just doing the 1 and the 0.5, but like if I was being honest there, that's more of like a 3/4 kind of thing. But in terms of simplicity, I want to keep it to just 1 and 0.5. But anyway, um, repayment of debt actually, it looks like they're issuing more debt than repaying. They are repaying debt, but they're issuing more, which isn't great. And also, so their stock repurchases are really, really good. I mean, fantastic. But one thing I'm noticing is they're spending billions on stock repurchases, but they're not fully, like, they're issuing more debt. Why would they issue debt and then repurchase stock? Why not just not repurchase the stock and not need to issue the debt? That doesn't make too much sense to me. But again, they are also repaying a ton of debt, but it's not outpacing the issuance. So that's a 0 there, unfortunately, but what are you going to do? Segment history for PayPal looks amazing. I mean, very consistent sales growth every single year. I mean, just in the past few years, since 2018, they've basically doubled their sales, which is awesome. But let's get into the ratios here. See the net margin. Net margin, fairly consistent. It has grown from the start and in the past 2 years. We'll have to see what 2024 looks like. Let's actually glance into the quarters here and see what that is looking like. Net margin. Okay, it's stable. Not really decreasing at all. Increase from 22, 23. It looks like. So I think I'm going to give it the points there because stability is more important when, again, if there's sales growth, you want it to be stable. If it's increasing, way better, even better. But if there's sales growth, 15% of 2 billion is more than 15% of 1 billion. So they're still making more profits. If the net margin is stable and the sales growth, that is good. Yes. Returns on assets, return on equity. Let's go back to the years for that. Okay. Got some growth, got stability. Now with this, it's more about consistency rather than growth. So pretty solid there. I mean, it did tick up a decent amount from 2022, so I'm going to do the full points for that as well. And then long-term debt to total equity decreased in the past year, but overall it's kind of increasing. I mean, doesn't look the greatest, but it's also not really bad either, I would say. Okay, increase literally the past 4 quarters. Decrease from a high of 56 though. But you know what? What was their cash debt situation? So here's the thing. Their short-term and long-term debt wasn't decreasing, but it was easily covered by their cash. So while this is kind of an issue, the stability, if you could really say stability, I mean, I don't want to take the points off, but I also don't think it deserves the full points. So we're going to go with half. So overall, PayPal, in my opinion, excellent. 19 out of 22, 86.5. We're putting that in the rating right here. What did I say? 86.5. And today is perfect. So locked in there. Let's continue to rate this top to bottom. So far, kind of middle of the pack. But again, I would say any rating here that's above like a 70, 75 would be considered a financially very solid company. If it's above like an 80, that's really good. Anything above an 85 is like excellent. I don't think anything, it would be incredibly difficult to be over 90. All right, really quick. Forgot to do an outro there. One of my roommates came home and surprised me a little bit. See you in the next video. That's PayPal. Let's do it. Goodbye.